Thank you very much for your patience. Thank you very much for attending this presentation meeting despite your very busy schedule. This is NYK Line presentation meeting of the financial results for fiscal 2022 second quarter. My name is Shuichiro Shimomura, the head of IR group. I'd like to serve as a facilitator today. And I'd like to introduce today's presenters. First of all, Representative Director and President Nagasawa, President Nagasawa. This is Nagasawa. Hello to all of you. And then the Senior Managing Executive Officer, Mr. Harada. Hello, this is Harada. And the Senior Managing Executive Officer and the CFO, Soga. My name is Soga. So today, President Nagasawa and Mr. Soga will give you the overview of the results of the second quarter fiscal 2022 and full year forecast. And we are going to have some time for Q&A before we close at around 4 p.m. Japan time. And the materials are available from our website. And the questions, you can use the chat box or you can ask orally. And when we reach to the Q&A session, we will explain how to ask a question. And including the Q&A session, the meeting will be recorded and it will be streamed later on and made available online. So President Nagasawa, over to you. Once again, thank you very much for your participation. This is the presentation meeting of the financial results for NYK Line's second quarter fiscal 2022. Thank you for your attendance today. And also, I would like to take this opportunity to express a deep gratitude for your support and cooperation to NYK Line. First of all, second quarter under results overview, as well as the 2022 full year forecast. And also, I will talk a little bit about the new midterm plan, or the progress against the current midterm plan. And then Mr. Soga will explain the details about the results of the second quarter. Please go to page 3. Second quarter results are outlined here. Exchange rate. Last year, in the second quarter, compared to last year's second quarter, about 110 yen to 132 yen. So largely, the yen got weaker. That was the tailwind for our business. But when it comes to revenue and recurring profit and net income, the profits and the revenue increased. First of all, revenue 1,365.8 billion yen, about 300 billion yen increase year on year. In the bulk shipping business, there was an increase in the automotive transportation, and also the significant increase in the revenue by the logistics. So about the 300 billion yen increase year on year. When it comes to recurring profit, 765.3 billion yen. So once again, increase by 368 billion yen year on year. So this year, once again, liner and logistics business, which includes liner trade, ONE, air cargo transportation, and logistics, Y&K, all these businesses have been brisk, and we were able to maintain high level of profitability. So out of 368 billion, less than 300 billion yen are because of this liner and logistics business. And when it comes to bulk shipping business, dry bulk, in that area, we were able to acquire the transportation contracts, which are favorable, and also we were able to flexibly respond to the changes in the transport demand in automotive transportation. We achieved about 70 billion yen increase. And as for the exchange rate impact, I mentioned earlier. So as a result, net income was 706 billion yen. So once again, this resulted in the increase of the net income by 300 billion yen. And the dividend, as I mentioned repeatedly, well, our policy is the consolidated dividend payout ratio of 25%. So the interim dividend we announced 1,000 yen per share, but it was increased up to 1,050 yen per share. So that was the interim dividend. And well, the base rate date is the 30th of September, the record date. That is about the stock split, and this is the dividend to be paid before, based upon the number of shares before the stock split. And then please jump to page 9. This is about the full year performance. Continuously, well, at the time of the first quarter, when we announced the first quarter, and this shows how this performs against what we announced in September as for revenue. So the 2,700 billion yen, the upward revision of 200 billion yen, and the recurring profit 1,110 billion yen, and the up 70 billion yen, and net income 1,030 billion yen, up 70 billion yen from the previous revision. But the 112 yen to 137 yen, well, that is the major change in the exchange rate we applied, significant weakening of the yen. And that was taken into consideration for this upward revision. For the second half of the year, last year, liner and logistics business, second half, the performance was 515 billion, and this year it is the 291.8 billion yen, and also this year 60.6 billion yen, whereas it was 91.3 billion yen is another business. So in terms of the recurring profit, despite of the weakening of the yen compared to last year, compared to on year, well, the profit is down in the second half. So this is because of the slowing down and the lower level of the freight rate. So looking at these numbers, the second half last year and this year half year, so that was a peak time of our performance. Since then, gradually, it is coming down. It is partly because of the normalization of the logistics and the transportation. But in terms of the revenue, it is on the decreasing trend, which I cannot decline. And 1,050 yen for the interim dividend, the before stock split, that was what we announced. For the year-end the dividend, 160 yen per share after stock split. Our basic policy of the shareholder return is the payout ratio of 25%. So based upon this percentage, 145 yen to the 160 yen, we increased the year-end dividend up to 160 yen per share. So this is the overview of the financial results, but the details will be given by Mr. Soga, CFO. But before that, lastly, I'd like to mention about the new midterm plan. Page 18, please. Currently, so we made the current midterm plan in the 2018. And this year is the last year of the current midterm plan, as you see at the top of this page. When we started, our target back then was because of the favorable market condition, we were able to achieve the actual accomplishment, which is far higher than the targets. And based upon that, currently we are preparing and working on the preparation of the new midterm plan. And to the shareholders, institutional the investors, well, probably capital policy is what you are interested in. So once again, I'd like to reiterate on this point, capital policy. So ESG management is what we would like to promote. So from an investment point of view, of course, the environmental investment plays an important role. But in the upcoming midterm plan, our viewpoint or the visibility is towards 2030. How much environment investment will be needed? That's what we are looking at. And also to continue the business. For business continuity, what kind of capital is needed? So as the equity, how much do we need to keep our net equity? So based upon this, we are going to talk about think about the DOE introduction, and the dividend payout ratio. We need to have a good discussion on these topics so that we can embed and incorporate the good capital policy into our new midterm plan, and also our capital, how partially are we going to achieve the return to the shareholders. So that's what we like to look into closely. Well, probably the new midterm plan will be announced probably March next year, and we'd like to make a good preparation for that. So so much for my opening remarks and the summary. And then I will ask CFO Soga to give you further details. So Soga-san, over to you. Thank you very much. This is Soga, CFO of the company. Thank you very much that you attended this meeting despite your very busy schedule. So today, based upon the materials at your hand, please refer to that, or we are going to show the slides on the screen as well. So based upon that, first of all, I will give you the overview of financial results for second quarter fiscal 2022, and then I will talk about the revision of the full year forecast. Partly, well, the President Nagasawa already talked about these points, and some of my explanation, maybe the repetition of what he mentioned, but please bear with me. And last year, this year is the last year of the midterm plan. So I would like to talk a little bit about the progress so far. And then after that, we'd like to have a time for Q&A. Now, please refer to the material at your hand or look at the screen. So this is the overview of the second quarter fiscal 2022. This is on page 6 of the material. On the right-hand side, you see blue columns and the first quarter, second quarter, and the first half cumulative. The revenue is 1,365.8 billion yen, operating profit 163.3 billion yen, recurring profit 765.3 billion yen, and net income is 706 billion yen. So all these numbers are higher year on year at all these levels. When it comes to revenue, the bulk shipping business, which includes automotive transportation, which increased, and also we acquired the transportation contract for the dry bulk under the very favorable condition, and also logistics business, the freight rate improved. So as a result, bulk shipping revenue was 1,365.8 billion yen, up 314.4 billion yen year on year. As for recurring profit, as I mentioned, automotive transportation, dry bulk, as well as the liner and logistics business, which consists of the container shipping, the air freight and air cargo, and the logistics business, the movement of the cargo slowed down. However, we were able to maintain the high profit level, and the recurring profit was 765.3 billion yen, up 368 billion yen year on year. But as was mentioned by President Nagasawa, there was an impact of a weaker yen that contributed about 66.7 billion yen of the positive effect of a weaker yen is included. And then considering the extraordinary loss items as well as a corporate income tax, net income was up 294.7 billion yen year on year, up to 706 billion yen. All these numbers and explanations are written on page 3. Now, let us move on to the breakdown of recurring profit by segment. I'd like to give you further details. Please refer to page 7. First of all, liner trade. On the right-hand side, there is a blue column, and please take note of the lower part of the first half. The liner trade, the recurring profit was 567 billion yen, up 276.6 billion yen year-on-year. It is because of the brisk business of the container shipping of ONE, which is the equity method company. Mainly in Europe and the US, there was a inventory accumulation of consumer goods and inflation, and that resulted in slowing down of the transportation demand and the declining trend of the spot rate. However, despite of that, ONE has been able to maintain high level of profitability and the good business results. Next, air cargo transportation. Recurring profit 44 billion yen, which is up 11 billion yen year-on-year. Once again, there was a lockdown in China, slowing down of the world economy, as well as the weakening switchover from ocean freight to air freight. There was a weakening of such a trend, and that resulted in the slower cargo movement. However, at the same time, there was a brisk demand for the shipment of the semiconductors, and also business was supported by long-term contract. So freight rate remained high as well. Next, logistics business. Recurring profit 37.1 billion yen, up 8.7 billion yen year-on-year. Within the forwarding division, air freight handling, as well as a profit level of that segment decreased because of the slower business related to automotive transportation. And as for the ocean freight, the volume was declined year-on-year because of the slower the cargo movement. However, we made efforts to expand the sales of ancillary services like customs clearance to maintain the profitability. In the contract logistics segment, there is the increase in the personnel cost as well as utility expenses. However, mainly in North America, the general consumer goods movement was very active, and the segment remained strong. Next, bulk shipping, recurring profit 119.4 billion yen, up 71.7 billion yen year-on-year. As for automotive, transportation, because of the shortage of the semiconductors and expansion of the pandemic, and there is a concern over the automotive production volume reduction. But we try to optimize the vessel deployment and the shipping schedule, and we responded to customer needs flexibly, and also we made efforts to collect alternative cargos in order to increase the utilization of the vessels, and we have been able to acquire the transportation volume which was higher than last year. As for dry bulk business, well, the market boomed the out of season in the first quarter. However, since the start of the second quarter, the global slowing down of the business became evident. So the Capesize as well as other vessel types, the market declined. However, we were able to obtain the transportation contract at the very good timing under the favorable market condition in the past. And also, we made the efforts for the cost reduction. So we were able to maintain the good results. As for energy business, the market it remained stagnant around the July. However, there was a rebounding of the business in the VLCC, and because of the Russia-Ukraine situation, the shipping ports changed, and that resulted in longer transportation distance, and also the VLCC the demand became tighter, and also the LNG and the oil tanker businesses were supported by the longer the contract. So the energy business also remained robust and strong, including LNG and the offshore business. There is another the portion of this table titled Others, and it is related to real estate, which experienced the reduction in both revenue and profit. It is because of the partial transfer of subsidiary shares, and the real estate business size itself became smaller, and that is the reason. What I have just mentioned so far is written on page 4 and page 5 of the material. Please take a look at these pages later on. Next, let me move on to page 8 of the material. So this is the summary. So the results of the second quarter, fiscal 22, are shown on the right-hand side in the graph. So the both revenue and profit increased year on year in all the key segments. On the left-hand side, you see analysis by factor. Out of the total increase in the profit of 368 billion yen, 66.7 billion yen is because of the exchange rate or the weaker yen. So so much is the summary of the results of second quarter 2022. Next, I would like to talk about the full year forecast for fiscal year 2022. Please go to page 12. On the right-hand side, there is the part which is written in blue. This is for full year basis. As for full year forecast, back in August, we announced the last revision, and it was also revised once again upward for revenue, operating profit, recurring profit, and net income. All these numbers were revised upward. Full year revenue increased by 200 billion yen up to 2,700 billion yen. Operating profit 270 billion yen up 20 billion yen from the previous forecast. Recurring profit 1,110 billion yen up 70 billion yen from the previous forecast, and net income 1,030 billion yen up 70 billion yen from the previous forecast. Looking at the second half, recurring profit increased by 24.7 billion yen from the previous number of 320 billion yen. Now it is 344.7 billion yen, and the net income increased from the previous forecast of 290 billion yen by 34 billion yen. Now it is 324 billion yen. All these numbers were revised upward since August. But comparing these numbers with the figures of the first half, these numbers are about 300 billion yen lower than the first half. It is due to the forecast of the container shipping business by ONE largely. And back in May and August, already we included this in the forecast, meaning that the second half is lower than the first half. So this is not a surprise. So as for the second half, since in and after the third quarter of the business, well, there are many factors that are uncertain, including the policy rates by various governments, and when the disruption of the supply chain will be alleviated, when and to what extent the container freight rate will be lower. So these are the factors that are quite difficult to forecast. So all these the full year forecasts are not excessively conservative. So this is the revision of the full year forecast, taking all these factors into consideration. So please regard this as a very solid forecast. Now, as for the exchange rate assumptions, back in August, for full year rate, it was 127.62 yen to the dollar, but we changed this to 137.28 yen to the dollar. And the bunker prices, we changed from $838.24 to $101.85 per metric ton. So we changed these numbers a little bit. So these are the changes of the assumption.
Next, I will explain the full year forecasts for each business segment in terms of recurring profit. Please refer to page 13. Please look at the full year column figures in blue on the right. The lower part is recurring profit. First, in the liner trade segment, we forecast recurring profit of 815 billion yen, an increase of 80.8 billion yen from the previous forecast. In the container business, we expect the supply-demand balance to normalize as a result of the easing of port congestion and a decline in transportation demand due to global inflation and the build-up of inventories of consumer goods in the U.S. And we expect the spot spot freight rate adjustment that began around August to continue in the second half. Therefore, although we expect a decrease in profit in the second half compared to the first half, due to the first half performance supported by high freight rates and the foreign exchange impact of yen depreciation, we expect full-year results to exceed our previous forecast in August. In the air cargo business, we expect recurring profit of 73 billion yen, down 4 billion yen from the previous forecast. Due to the global economic slowdown, we expect the slowdown in air cargo movement to continue. Although freight rates are expected to soften compared to the first half of the fiscal year due to the easing of supply-demand balance for transportation space, we anticipate that the amount of profit decline will be somewhat contained by the supportive effects of multi-year contracts and other factors. In the logistics segment, we forecast recurring profit of 52 billion yen, up 4 billion from the previous forecast. In the ocean freight forwarding business, we expect a decline in profit level due to the current downward trend in the market, but we expect to maintain a high profit level for the full year due to the strong first half of the fiscal year. In the air freight business, profit level is expected to decline to a certain degree due to a slowdown in cargo movement. In the contract logistics business, despite the impact of further increases in labor costs and utility costs, we will work to stabilize earnings by revising contracts, including price revisions and other measures that we have been pursuing, as well as through cost-cutting efforts. Lastly, in the bulk shipping segment, we forecast recurring profit of 180 billion yen, an increase of 26 billion from the previous forecast. In the automotive transportation business, the impact of production cutbacks in completed cars due to the shortage of semiconductors and parts is gradually dissipating, and we expect to maintain firm transport volume by capturing export demand for back orders from automakers as well as transport demand for construction machinery and used cars. In the dry bulk carrier business, market conditions are expected to weaken in the second half for all sizes of vessels, but favorable market conditions in the first half, especially in the first quarter, for small and mid-sized vessels are expected to contribute to strong full-year results. In the energy business, we expect the VLCC market, which has recovered sharply from the previous fiscal year, and the VLGC market to continue to be strong. And we also expect the LNG carrier and offshore business to continue to perform well, supported by stable medium and longer-term contracts. Please refer to pages 9 to 11 of the presentation for further details of what I've just said. Finally, I would like to explain the dividend forecast. Mr. Nagasawa explained about it. Please refer to page 9. As you can see, in accordance with basic shareholders' return policy, which aims for a consolidated dividend payout ratio of 25%, we have increased our interim dividend by 50 yen to 1,050 yen per share, and year-end dividend by 15 yen to 160 yen per share, based on the results for the first half of FY2022 and the upward revision of net income for the second half of the year. As you know, a 3-for-1 stock split was implemented with September 30th as the record date and October 1st as the effective date. On a pre-split basis, the year-end dividend would be 480 yen per share, or 1,530 yen per share for the full year. This is an overview of the financial results for the second quarter of fiscal year 2022 and the revision of the full-year earnings forecast. Next, as the last item on my agenda, I'd like to briefly explain the progress of the current medium-term management plan, which is now in its final year. Please refer to page 16 of the document. The goal of the current medium-term management plan is to strengthen resistance to volatility, business growth, and improved profitability. And we have established the following 3 pillars as necessary actions to achieve this goal. First, number 1, establishment of a business portfolio with high resistance to market conditions through a fundamental review of the dry bulk business and the success of the integrated container ship business company. Number 2, establishment of a stable profit structure by building up businesses with stable freight rates. Number 3, improvement of efficiency and creation of new value through digitalization and green initiatives. We have been engaged in specific actions, and the progress on the above 1 and 2 is briefly shown on page 16. In terms of building up stable freight rate business, as shown in the bottom left chart, the logistics business has steadily expanded and strengthened since 2020. So the other logistics is shown in light blue. Since 2020, it's expanding very steadily. The automobile transportation business has steadily secured transportation volume through flexibility and ingenuity, even in the situation of reduced production of finished cars due to the expansion of the pandemic and chip shortage. And the energy business has steadily built up its LNG carriers business, a priority investment area. On the top part, it says energy. So when we developed the current midterm plan, we had 71 LNG carriers, or that is end of the year 2017, and as of the end of 2020, 86 LNG carriers. And including all the other contracts, 111 vessels. As shown in the bottom right chart, in businesses other than stable freight rate business, we have improved the profitability of dry bulk business through structural reforms, such as early return of vessels with high charter rates, and have reduced the impact of market fluctuations through more stringent exposure management. ONE, our integrated container shipping company, has emerged from its initial struggles and is now a highly successful company. NCA, our airline business, which had been suffering from losses for many years, has also become a significant contributor to consolidated earnings. Of course, we cannot deny that the change in logistics structure due to the spread of COVID is a major factor. However, I'm proud to say that this is the result of the wisdom and ingenuity of each of our business decisions to ride the wave of change and do what needs to be done with a sense of mission to never stop logistics for the sake of the lives and happiness of people around the world. As for the third pillar, page 17 shows an example of how we are steadily advancing our efforts to achieve net zero emissions by 2050, promoting ESG management. In the field of fuel conversion for ships, we are working on the implementation and commercialization of ammonia fuel, which is considered a promising next-generation zero-emission fuel, as well as various offshore projects related to offshore wind power, which is considered promising as alternative energy source in Japan. We newly opened Akita branch to support such projects through smooth cooperation with the local community, making steady progress in tangible ways. Finally, please refer to page 18 for the quantitative targets and progress of the current medium-term management plan. We have already achieved the targets for each of the financial indicators in FY2021. Based on the above, we are currently preparing a new medium-term management plan, as Mr. Nagasawa explained. This plan will start in the next fiscal year. This plan is based on a roadmap from an ultra long-term perspective, looking ahead to 2050 and will cover the period up to 2030. The most important parts of this plan are how we will pursue capital policies based on the financial structure that has improved significantly over the past few years, how we will systematically further advance our decarbonization efforts in terms of environmental responsiveness, and how we will develop human resource strategies to promote ESG management in the future. Of course, this is not all, but we would like to present to you a new medium-term business plan that incorporates all of these things. The announcement is scheduled for around March of next year. That concludes my presentation. Thank you.
Now we'd like to open the floor for Q&A session. Thank you very much. Liner and logistics business, I have 3 questions there. Container shipping, first of all, GRI and the long-term contract. These are what I'd like to ask you. Currently, in the first quarter, whether it is possible to increase the rate and the freight rate on the long-term contract. Are there any customers who are moving away from the long-term contract and they try to choose a spot transaction? And the next is about the dividend from ONE. The 31 billion yen, is to be received on the 15th of November. And that is on the income in the second half. And do you have a clear policy regarding ONE rather? And also the air and the cargo. How many the contracts are for the multiple years? Are there any risk for the early termination of the contract? So these are the 3 questions I'd like to ask you. Thank you very much. Thank you for the questions. So for these 3 questions, Mr. Harada, in charge of the business, please respond to those questions. Thank you for the questions. So these 3 questions are related to L&L. So one by one, I'd like to respond. First question. GRI related to container shipping and whether it is possible to raise the freight rate under the current condition. How about its impact on the current the status? Are there any switchover from a spot on the rating to long-term contract? GRI, first of all, you mentioned. So the spot price may go up. And the spot rate the restoration is what you mean by that. It is written in the industry magazine, but on some of the route and the services, it is starting to some extent in the South America, for example, but it is reversing to the previous the condition, so it is not unstable. And also service to Middle East. Rate restoration is emerging to some extent. But the Trans-Pacific is the biggest the area, particularly the west coast of the U.S. is the major market. We expected some movement in November. However, supply-demand condition is not the tailwind for that. There isn't much demand, and so because of that, in November, rate restoration is going to happen or not? I have a question mark about that. But when we only look at the supply aspect, 3 major alliances and as well as a single service providers, including them, structural VMS, we call them structural VMS, but there are 10 loops. Stopped after the national holiday. So of course it depends upon the demand situation, but the spot rate may increase from time to time, and so that is what the ONE is thinking about. And whether there is a switchover back to the long-term contract, early August we make some announcement. The numbers of the ONE was not announced, but based upon the information from ONE, 3 shareholders, the projection regarding its impact on the long-term contract. I think its impact is limited. if the price differential becomes larger, and if it gets longer in time, then customers may start talking about it. So the ONE, the revision and the review of the business, I believe that it is already incorporated into their view. In other words, right at this moment in front of us, well, it is a limited trend to switch from spot to the contract-based rate. But if the spot rate comes down significantly and takes a longer time, then it may have the certain impact on the contract, and that has already taken into consideration in our projection. Second question is about the dividend from ONE, about 310 billion yen, to be paid on the 15th of November. And how about the future policy, or how you regard the dividend from ONE? The ONE achieved record profit in the previous 6 months period, so it was agreed upon to pay this much amount of dividend. However, well, there is a consensus between one and the certain shareholders, but on the long-term perspective, and what shall be the long-term capital policy for ONE? Well, it is difficult to forecast the market in the 2023 demand as well as the supply, the availability of the vessels. So we have to pay close attention to that and continue discussing. So right now, dividend level by ONE, there is nothing that has been determined from a long-term perspective. Lastly, air cargo was another question. Are there any multiple year contracts, and what is the current status? The specific numbers, sorry, we are not able to give you specific numbers, but as NCA, main market of NCA is between Japan to North America. So that is the major market for the company. Looking at that service, there are certain contracts that go beyond 1 year. So the space from Japan to North America, and to some extent, about 20 to 25% of that are covered mostly by a contract more than 1 year. Well, there are several the contracts that go beyond 1 year, and totally the space has been sold off and taken up, and that is a portion that is not subjected to the fluctuation in the market. Did I answer your questions? Yes, it was clear. Thank you very much.
Next question, please. I have 2 questions. The container spot rate related questions. First, so the previous person asked similar question. For the next quarter, the demand supply there will be better balanced. I read about it in the industry newspaper. So what is the reason, and what will be the timing of demand and supply to be well balanced? That's my first question. And the second question, based on the spot rates, where will come the break-even point? It is less than $2,000 in the West Coast, and on the East Coast of America, it seems that the slowdown is accelerated. The charter cost and the labor cost are on the rise. So break-even point, where are you positioning the break-even point? Thank you. So Harada-san is going to answer those questions. Thank you for the questions. 2 questions. First one is about ONE. The CEO, Jeremy, said that in the next quarter, the demand and the supply will be better balanced. And what is the background of that comment? So on that point, I'm sorry, I have not talked about it with Jeremy on a specific terms, but as I mentioned earlier, especially for the North America, structure of VMS, in other words, there are about 10 loops gone from the market for various reasons. For one thing, the spot-focused companies, the current spot rates, of course, it depends on the size of vessels. They are using spot rates without long-term contracts. So the situation is becoming very difficult for those players. Of course, chartered vessels, your own vessels, situations could be different. Calculation will be different. But when the supply gets tighter, and for the demand side, the North America, there's labor union negotiation, and the Christmas is coming up. So the stock has been built up, and the impact is now being felt. And in North America, to what extent the American consumers will purchase things. So once those stocked portion is consumed, then there will be new demands. And based on that, the balance will be better, especially for North American road. And as to the break-even point, the second question, that's difficult to answer that question. There's one thing that I can say, namely, the very limited spot-focused players, they're paying very high chartered fees. Setting aside those players, the three major alliances members, with the current spot rates, the profit will increase when the space is occupied. That is the assumption. So it's not that the spot rate will reduce the profit level, but it's difficult to say whether they have complete their calculations completely. So the current spot rate will not bring the business to break even. That argument could be valid. The long-term contract players, at least for them, I think we can say that. Thank you. As to supply side thinking, right after the COVID emerged, there were the cargo movements that were deeply affected. Currently, spot rates are coming down, but there will be some profit, probably 4%. There's a level of the decrease in the flights. I mean the vessels or the shipping trades, where currently the gap is so huge between the American spot rate and the contract rate. When the freight goes down further, that will worsen the overall results. And that argument is completely valid. So rather than fulfilling the next space, you might want to stop the buying the space. Thank you. Thank you for the questions.
Thank you very much. First question is about the air transport and the logistics, air cargo and logistics. Air cargo, the spot rate came down in October. And you plan that you can generate this much profit despite of the reduction of the spot rate, and also compared to the first half, you mentioned that the second quarter the business may decline in the air cargo, but the logistics, but that was not the case. So could you please clarify? And the second point, how about the financial discipline that you like to maintain in the midterm plan and excessive capital? What is your idea about the excessive capital? So once the policy is established, please let us know. But are you conducting a good discussion for that point? I'd like to hear your view on that point. And then third question is also related to next midterm management plan. And to use more leverages, so the profit. Well, they have to create your own business. That is one important point. And as a target, well, as a result of the investment, by when how much the profit can be generated. So you can set such target. Do you have a strong intention to clarify that and also make such plan for the future? Thank you very much for your questions. So first of all, the first question was about the cargo and logistics. So Mr. Harada, please respond to that. Second question, third question are related to midterm plan. So Mr. Suda, Mr. Soga, and also I will respond. So Mr. Harada, please. Thank you for the question. First question was about air cargo and forwarding related business. First of all, air cargo spot rate is coming down, and is it fully reflected on the projection of the business that we announced this time? Yes, most recently, particularly Shanghai, Hong Kong, for the North America, the spot rate decreased. You're right in mentioning that. So at the last minute, we already incorporated that into our plan. So the spot rate reduction is already included in our forecast as well as the plan for this year. And forwarding related point and the logistics, this is about YLK. And the numbers may be too conservative, so that's probably what you're referring to. Contract logistics is very stable, so setting that aside, well, the AFF and OFF, AFF, one concern is that the volume of the cargo is not coming up and it is not increasing so much. And it is not that the gross margin will go down, but the volume of the cargo is not sufficient. So certain space has to be returned, and that is what is happening in forwarding. So we already included that in our view. As for OFF, in forwarding, there is some time difference always. And the contract with the customers, and it is very high, but the company was not able to secure the space. So if we buy the space from the ship owner, well, it will affect the profit. It will not continue. Once the contract expires, then the contract rate in the next time around will go down. It is because of the time differential. And it was also taken into consideration, but we were somewhat conservative in this point. So there may be some upside. That's how I view it. So that's my response to your question. And then second question about the midterm plan, the adequate capital policy. What is the idea about? Mr. Soga, please. Thank you very much for your question. First point, the financial discipline, and the second point, excessive capital. Relationship between these two are very close. They are inseparable from our viewpoint. First of all, the financial discipline. Well, we have so much the net worth and the equity. It is not that we can invest in anything. So how to introduce the discipline and how, of course, we are discussing on this point. And one major point is that so far within NYK, TIRR or EIIR. So these are what we focused upon so far when we decide upon and evaluate the investment. However, that's not sufficient. And also how much return shall be generated and how in each project the return is earned and generated by each project. We need to keep track of each project every year, and IRR is not sufficient to do so. To monitor these factors, ROIC and other indicators are available. So which indicators are the best for us? for us, which allows us to take the immediate action. So that is a viewpoint. We are studying various the alternatives, and also the net worth or the shareholders' equity is coming up so much. That means the WACC is very high, WACC. And if an investment is done based upon WACC, it is quite difficult to make the adequate decision. We may miss the opportunity. So if that is the case, then the action to lower the WACC may be needed. In other words, right now, the equity ratio has come up to the very high level. DER is very low. So what is the adequate level for them in order to rectify the positioning of the or the level of WACC? That's part of the discussion as well. And then the amount of the net worth and the shareholders' equity and the how to optimize that and to raise the DER. Maybe we should use more leverage. And then what shall we do to raise the lever or the leverage as we consider the investment? That is also related to the financial discipline as well as the excessive capital, the actions. So these are what we are focusing upon now. So the financial discipline, the capital policy, as well as the excessive capital that has been built up. So what is the most adequate action? So that's what we are focusing upon and studying right now. As for your third point, the purpose and the target of the investment, naturally, well, we need to raise our profitability. That is a part of the target. So when it comes to the investment target, well, where to put the new criteria, new indicator to make that decision. That's what we have to understand. And ESG, the environment-related investment, particularly, it is not that we can see the results immediately. After many years, we may be able to see the actual results and return of that investment when it comes to ESG investment. So internal carbon pricing, of course, we have that. And also we have to think about the other factors as well related to environment investment. And we don't have any clear answer to that question. But it is now within the agenda for our discussion. And additionally, well, we didn't have sufficient capital level, so there were certain investments that were outside of the balance sheet, But to raise the ratio of our own vessels, for example, these are the specific actions that our business units have already started studying. So these are the answers to your three questions. I would like to make some additional comment. So the adequate level of capital, and that is also relevant to the shareholder return. And there are many factors to be considered, as Mr. Soga mentioned. Well, when we make new investment for the environment, or the offshore wind, the new investment, there are such new investment opportunities as well. And at the same time, as we lost our financial health in the past, there were certain things that we were not able to do. For example, deterioration of the lineup of the vessels. So we also have to look at that as we consider investment policy. And also profitability is important. Looking towards 2030, of course, there may be some aberrations or the tolerance to be considered, but how much cash we can generate, how much profit we can achieve by 2030, we have to make simulation. And what is the adequate level of capital with 2030 in mind? So that's what we'd like to consider. And so that's how we would like to approach to this question. And what concerns me, as Mr. Soga mentioned right now, is the environment investment. As was indicated on the slide, the ammonia-based ships or the LNG-based vessels, the return from customers is difficult to expect. So justification of the investment projects, how to justify those investment, And we have to clearly indicate that to the investors. Otherwise, our decision will not be accepted, and the investment shall generate return sufficiently. So we have to introduce ways to show the roadmap, and for example, the internal carbon pricing may be utilized for the explanation, and the CO2 is going to be a cost in the future. And then that means the collection of the investment because of that. But it may take time to reach to the stage. So we have accountability, responsibility to explain clearly. So we have to be ready to do that. That is all for my response. Thank you very much.
Next question, please. So this is going to be the last question. I have 3 questions. First, container shipping business. The current spot, the rate that will bring some profit, I understand. But when the demand goes down further going forward, because you can reduce the number of the routes or trades, and by doing so, either you can cope with that, or there will be some services which will go into the red. My second question is air freight, NCA, and logistics, or the use in logistics. I think the focus of your company between the two is somewhat different. Is there any other difference in the way of thinking about NCA and YLK? And as to dry bulk, for the second quarter, you said that you acquired some contracts at a good timing. How long do you think that the tailwind will continue? Thank you for those questions. Harada-san will answer your questions. Thank you for the questions. So about the container at the spot freight rate level, when the rate goes down, any services which will go into the red? Well, by route, it's not that we are seeing any the services which are in the red. Or but going forward, compared to when the COVID started, or compared to 10 years ago, depending on routes, it could happen that there are some services will go into the red. But the question is, how long will that last? And watching that closely, we will make decisions. It will be meaningless to transport air, nothing, in other words. That will be meaningless. Of course, there are regulators in among different the countries, the shipping companies, and the specific decisions are made among the other alliances, so we need to be prudent. But we do not assume that we can continue the services in the red for a prolonged time period. It could happen temporarily, though. As to air freight, in our case, this is about NCA, asset type business, and YLK, forwarding business. Maybe there are some differences between the two. But the big difference between the two is that as follows. They are dealing with different sectors, industries as customers. So the shipping volume of these different industries could be very different. And they are formulating their numbers and assumptions, talking with their customers, especially for the chip-related the business. NCA is engaged in the semiconductor, but not so much for YLK. So they might have different perspective for demands. In the case of YLK, cross-trade included, they are engaged in the wider scope. And the NCA is mainly Asia-America routes. So asset business and the forwarding business, that the perspectives for demand could be different. Thank you. As to dry bulk, as we showed in the presentation in the second half, for the bulk shipping as a whole, 120 billion in the first half and 60 billion in the second half. So it is getting very tough for dry bulk. Index, there's 120 or so for the second half. Especially for the Cape size, the second half will be tough. But in 2020, we executed structural reform. So costly vessels are now gone, and index link and other market-resistant the vessels are more in use. So when in the current market conditions, there are some level of resistance. In the first half, it was robust, but in the second half, we cannot deny that we might struggle to some extent. Thank you. We have passed the scheduled time. I'm sorry about that. So with that, we'd like to conclude the announcement of results for the second quarter of fiscal 2022. Thank you.